Hi friends, my name is Rohan Bharat Chandra. January to March 2023 quarter was very negative for Indian stock markets. FIIs, DIIs and mutual funds increased their stake in some companies and decreased their stakes in other companies. It is common sense to understand that large buying and selling can impact the stock price movement in the short term. Even large number of retail investors buying and selling particular stocks can have some impact. As per a newspaper report, data has clearly shown how the rise and fall of investment by FIIs and DIIs increases or decreases the stock price. Some good observations can be made from this data. After I explain this data, then I am going to give you some observations, so please listen to them carefully. Impact on holdings increase. For example, when FIIs increase their stake in January to March quarter in 609 companies, the average stock price movement was minus 6.13%. DIIs 529 companies they increased their stake and minus 6.2% was the stock price movement. Mutual funds 417 companies increase in stake and minus 6.08% average stock price movement. Insurance companies 237 and minus 6.15%. Retail investors 819 and average stock price movement 17.62%. Now, impact on holdings decrease. When FIIs decided to reduce the stake in certain companies, that was 714 companies in January to March 2023 quarter, average stock price movement was minus 14.21%. DIIs 438 companies decrease in stake, minus 11.83%. Mutual funds 290 companies holding decreased and minus 9.5%. Insurance companies 287 and minus 8.62%. Retail investors 972 companies decrease in the holdings and average stock price movement 7.56% negative. Now coming to the comments and observations. Point number 1. When the FIIs, DIIs and mutual funds, insurance companies increase their stake in companies, the fall in share price was only around 6%, which was less than the overall market fall, because when they were buying, so the selling pressure was not as strong as in the other companies, and that is why the fall was very less. Point number 2, on the other hand, in the companies in which retail investors bought stake, it did not help to support the stock prices. The stocks still fell significantly by 17.6%, which is negative returns. Point number 3, similarly in the companies in which FIIs, DIIs, mutual funds and insurance companies have decreased their stake, the fall in stock price was significant. It was 9 to 12% and more than the overall market fall during the period. So, when the selling happened, that time these stocks fell more, they did not fall as much as the market. Point number 4, also in spite of retail investors selling many stocks, they fell only around 8%. Point number 5, this means that FIIs, DIIs and other large institutions have a significant impact on the share price movement in the short term. Retail investors may be in large numbers but do not seem to have much impact on how the stock price moves due to the lower investment they make. Point number 6. So the above observations can be noted in our mind as a general rule of how investments by large institutions impact stock prices. With this, we will know which ones to take seriously, which investment we need not worry about. Point number 7. Please note that stock prices need not always move higher just because of institutional investment, but may also reduce the fall if overall markets are weak. So, just because some institutions are buying doesn't mean the stock price has to go up. In fact, instead of going up, it may fall, but it may fall much lesser than the other stocks because there is good buying in those particular stocks where the institutions have put money. If you like this video, please click the like button and also mention in the comment section, have you motivated your relatives and friends to invest in stock markets? If yes, type yes in the comment section, otherwise type no. Thank you for watching this video. Bye bye and all the best.